Elsewhere, from airlines to automobiles, Rivian shares under pressure after announcing plans to raise more than $1 billion through the sale of green convertible bonds. That stock is down 7.6%. Ed Ludlow has more. Hey, Ed.
Yeah, good morning, John. The downward pressure on the stock reflecting that issuing convertible bonds can potentially have a dilutive impact on the shares outstanding. As our colleague Joel Levington in Bloomberg Intelligence points out, this kind of shores up the liquidity story around Rivian, which ended the fourth quarter with around $12 billion of cash, cash equivalents and unrestricted cash on its balance sheet. But investors have had concern about the rate of burn that this company is going through as it ramps up production. The green angle also interesting. Of course, this is a maker of electric vehicles with longer-term, broader ambitions around the transition to clean energy, but it does add to an existing debt pile, these green convertible bonds due in 2029. The issue of converts is kind of interesting to me, right? For investors, this is an opportunity to get an interest payment with, the right but no obligation to convert to shares. For Rivian, this is taking advantage of a cheaper means of raising funds amid higher interest rates. But look to the equity story, right, and that share performance on a 12-month basis or more. You kind of get why they might do this, John, instead of just going directly to the equity market. It's an interesting situation for Rivian, and they're kind of following others in this space. I'm thinking, of course, of Lucid that look to the same mechanism.
Looking forward to your coverage on the tech show later, Ed. I just wanted to squeeze one in just to follow up to our conversation earlier this week. The price cuts again at Tesla. How are people responding this time around?
Yeah, look, earlier price cuts in the year unlocked pockets of demand. What I would say about the Model S and Model X is very low volume production, 100,000 units just out of Fremont, and they're still very expensive. There's an interesting debate about the rationale behind it, given that they're still outside the scope, in some sense, of the IRA tax credits. But, this is a lever that Tesla's using. Other automakers are following suit, and the outperformance of the shares year to date to some peers suggests that analysts in the street see it as a useful mechanism to find those pockets of demand, particularly here in North America.
Tough year last year, massive year-to-date gains this morning, down about 1%. Ed, thank you, sir.